AskReddit by Thomatricky. How is investing at the stock market different from gambling? Trading, that is buying and selling stocks short-term, intraday, and trying to predict peaks and troughs to make money, is basically no different than gambling. Investing, that is buying large, diversified portfolios of the stock market, usually via index funds, for the purpose of holding for a long period, 5+ years, to gain wealth, is generally very low risk, as stock market history will tell you. Picking individual stocks or active funds to try and beat the market probably sits somewhere in between based on how much information you have access to and how good you are at interpreting it to company value. If you day trade, there is almost a 100% chance of losing money. If you simply view until you're all good. Generally speaking, in gambling, when the house wins, you lose. In investing, when the house wins, you also win. Maybe I can interest you in some shorts? Here's an answer based on what my finance professor told us. Gambling is a zero-sum game. In order for someone to make money, someone has to lose money. It's a fair game. Investing is not a zero-sum game. If the value keeps going up, barring any bubbles or other fuckery, then everyone can make money. I sometimes win at gambling. Funny. Biggest difference is that when buying a stock you are purchasing ownership of a company. In one, you do the cocaine after you lose your money. A lot more paperwork. Fundamentally, gambling is explicitly designed to make sure the odds are against you. Investing, in the sense of buying stocks to hold for the long term, is generally going to make money if you are smart about risk management. Of course, there is still plenty of risk. Economic downturns can fuck you pretty badly, etc. In the sense of day swing trading, you are essentially betting that you are better at predicting the market than other traders. Most retail investors are not. So that's a bit closer to gambling, but it's still skill-based, with some luck involved. The only gambling that could be close to the same idea would be something like poker, where skill is a big element of the game. Stock market is also designed to be in favor of the market makers and big players like Citadel, Virtu, etc. I'll come in with a different take. In gambling you are staking your own money to chance. With investing you are buying the right to extract value from someone else's work. You're betting on the house. The house doesn't always win regarding investing. In fact, you can cash out anytime you like without fear of the mob going after you or some SHT. Edit, I'm dumb. Sorry. You own part of the companies you buy. The return is also expected to be positive. Gambling will generally have a negative expected return. Although there are ways to guarantee money through gambling, and there are ways to give yourself an edge so your expected return will be positive. I have a coworker who's always trying to come up with a system for roulette. I tried explaining that he's looking for a pattern where there isn't one and the house has the odds. He didn't want to hear it. Buying stocks is more of an investment than gambling. Shorting and putting stocks is gambling. There is some investing that is pretty similar to gambling like 0DTE options, but most investing is a lot safer. In gambling, you give money to an entity that profits by taking your money. You only win if they lose. In stock investment, you give money to an entity that profits by growing your money. You win if they win. So the investment is closer to a partnership. There is still a level of risk, which one may equate to gambling, but the company wants to profit, which raises stock value, which makes money for all of the shareholders, which attracts further investment. A significant number of shares are held by people within the company, motivating them to grow the business. Ideally. It's important to fully frame questions like these. The act of investing through buying stock is in a vague sense a gamble, as the company could fail or lose value, but it's not like a slot machine. Taken to an extreme, everything in life is a gamble. You're rolling the dice on a car accident whenever you drive. You're buying equity, or some other interest, and control in a company when you buy stock. Up or down, unless the company folds, you own that. There is no house that wins when it folds. Now, the way some people use the stock market can be pretty much gambled. Day traders are essentially gambling, and in large part the government treats it as such. Things like options and puts look a lot like gambling too, it's true. The only other big difference is that ostensibly trading is rooted in events happening in reality, not just a probability table for cards or dice. If you have reason to believe, for example, a disease is going to kill all orange trees, it makes sense to make certain trades on orange juice manufacturers. There is still risk, of course, but is that gambling? House always wins in gambling by design. This is not the case with the stock market. Gambling in the stock market would be dicking around with options or buying biopharma stocks. Those stocks are almost always super volatile for reasons I'm not entirely sure of. I just know that every time I check the list for today's winners losers, it's almost always a lot of biopharma companies, in both categories going like plus 30% or minus 30%. Buying stocks in a solid company is not necessarily gambling because the company obviously wants to make money, and if they make money, you make money. What makes it seem like gambling is that nobody can predict the future, whether a stock will go up or down. You never know if the company will try to pull some sneaky stuff, get caught for it, and stock plummets minus 30% because of it. There is an underlying company with fundamentals and dividend payments. These fixed odds. https://en.m.wikipedia.org/wiki/gambling. https://en.m.wikipedia.org/wiki/traditional_investments. At the casino you bet on one event. In the stock market you bet on the average of a series of events. Beyond that there is no difference. The house always wins, and if you figure out how to do what they do you get punished. Gambling involves more losing. In a casino, you know the odds and they will tell you why you lost. If you invest in the stock of a sex lube company, the free samples you receive make losing less painful. Lol. It's not. You have better than 50% odds to make money if you invest properly, like not writing call options day before earnings or expo. You will never have those odds in a casino. Reason there are a million companies who just invest in the market, and 0 companies that gamble at casinos for income. Expected rate of return in the market is positive while casino is negative. By design.